All right, here we go. I tell you. All right, y'all. I'm so sorry. The broadcast got um the broadcast got kind of interrupted. I don't know. It was too much. It was so much static on the line. So it kind of it shut us all the way off. But we back now. So again, we're talking about the questions you're getting some answers to the questions, and I see y'all coming back in. Appreciate y'all for coming back in. We had a little mishap and StreamYard totally cut us off, but go ahead and share this video again. I have Kareisha Davis with me from 2+1 Financial Enterprises and Associates online with me today to give us some of those answers to some of those questions that we asked. So appreciate y'all for coming back in. Y'all make sure y'all share this. We were talking about the stimulus check and how I was under the impression, like a lot of others was under the impression because of the news and what it was saying about us having to pay that back, with our taxes. So I asked Kareisha that question, and I'm gonna let her go ahead and break that down. Introduce yourself first again, and then go ahead and break that down for us.
Okay. Thank you, Marie, for having me. I am Kareisha Davis, the owner of 2+1 Financial Enterprise and Associates. We are a small business or a business here in Fort Lauderdale. We provide tax preparation, life insurance, bookkeeping, business startup, anything under the sun that has to do with business. We pretty much can help you with it. We can help you get to where you need to be at. Right now, we're of course in tax season. So I was assisting Miss Marie, and she mentioned about the stimulus having to be paid back. You do not have to pay the stimulus back. Actually, the stimulus is a credit for you. It's called a Recovery Act credit. And that money is for individuals that made a certain amount, that didn't make a certain amount. You can't get it if I believe it's like 189,000, 199,000. Don't quote me on it, but it does have a cap on the amount of money that you can make. I think it's 99,000. I'm not sure. For some reason, I'm not sure on that. However, you get this money, you either got it the first time around, which was around April of last year, and then they just dropped checks December, January, and they said that if you didn't get your money by January 16th, then you will receive it on your tax return. This money is not money that you have to pay back. This money that is given to you so that you can stimulate the economy. They want you to get the money and they want you to pay your bills, but they really want you to put it back in the economy to make the money rotate. So that's what that's about.
Yeah, and I appreciate you explaining that because I hope if y'all got questions, y'all can go ahead and ask those questions while we sitting here today. Also, if there's a question about something else, business or something like that, I got it on here for a little bit. You know what I'm saying? So just go ahead and y'all can ask those questions. Also, the information for who she is up here now. Go strolling through the banner. She from Fort Lauderdale, where I was born and raised, and that's where she is. So a lot of y'all in Fort Lauderdale anyway. So y'all look her up because she is giving us the real. For real about our taxes, as as probably many others out there. Another question I had when it comes to taxes is if someone with their job did their W-4 and they put on their W-4 head of household, and in my instance, my company told me that if I have head of household on my W-4, they really not going to be pulling many taxes out. So it would be best for me to do single so that they could, take as many taxes out as they can. I'm trying to understand what's the difference between head of household and me being single.
So for the head of household, so for tax purposes, you have 4 different categories. You have head of household, single, married, filing together or joint, married, filing separate, and then you have the widow status. That's 5. Widow status. So for each one, we have the standard deduction. So that's tied in with your standard deduction. So mainly, a lot of people back before they changed everything, head of household really meant something. You get more money, but you get more on your standard deduction. However, when you're doing your W-4 form, it's really, because it's a new form, unfortunately, some places are not educated on how this form is actually done. So unfortunately, they don't know. So when they don't know, you don't know. So you have to ensure that your employer is taking out the right amount of taxes. Because what you don't want to do is at the end of the year, it's zero and you have no money. You paid no money in. And what happens when you pay no money in? You can't get any money out. And depending on how much you make, you may have to owe. So Marie, you saw that when you mind if I discuss? It's okay? Okay. So you saw when even though you were single, I put in everything and you owed. That what you owe, you were supposed to pay some of that. Pretty much like almost like anywhere from 7 to 10% should come out of your check. Now, I have a friend girl, she says, I'll deal with them later. Let me get all of my money up front. So with that being said, in your case, you was her because you got all your money and you didn't pay a tax. But guess what? You still owe a tax. So what happened when you put in your different credits, whether you put in your different credits, it offset it. So if you would have paid in more taxes and you received that credit, your refund would have been larger. However, so it's up to the individual, and that's why your employer pretty much say, I can't tell you how to file. I can't tell you what to put on that form. However, it's in your best interest to put in single. Now, in his case, I really truly believe he don't know what he's doing, because again, it's a new form. So they have to be educated. So what you probably would have to do, and I will help you with it, I can tell you, listen, down to the dollar, this is the amount that should be taken out of, regardless if you head of household or not. It's still amount that you have to pay. Just because you're head of household doesn't mean that you don't have to pay taxes out of your money. Did that answer the question for you?
Yes. And anybody on here, if you have a question, just type your question in. I can let her see it so that she can answer it. But yeah, that answers my question because, as she said, y'all, I was finna owe $2,000 because I'm at the job that I'm at. I did my W-4 and I thought I did it right, but they said it was the first time they were doing it too, because the W-4 form is a new form. So all last year, starting this new position, wasn't no tax being taken out. And yep, that was me because I wasn't paying attention because I was getting direct deposit. So when you get direct deposit, sometimes you don't pay attention to the check stub. And y'all don't say that y'all do, because a lot of us don't. Because I didn't. I was just working and going and didn't realize at tax time that, Lord have mercy, I'm finna owe IRS $2,000. I'm only being real and transparent with y'all so to help somebody, because y'all need to know this, and y'all need to go to somebody that can assist y'all. Well, I'm giving y'all Kareisha Davis in Fort Lauderdale if y'all don't know anybody else to go to, where y'all can go to 2+1 Financial Enterprises and associate, so y'all can get your taxes done, the best way you can, or whoever but you need to know this information. Another question is when it comes to and I'm helping y'all out because it helped me out, y'all. Another question is when it comes to dependents, if your children are at age 20, 21, those ages, are you still able to file them if they're going to college?
Definitely. They're full-time students. If they're in school, you can claim them. Okay. So the government, the IRS have tests that they have a residency test and all that good stuff. So it's things that you have to put in place. However, your question is, can you claim your grown child that's in school? If you're taking care of that child, you can claim that child. Now, that child, because they're over the age of 17, you won't get as much of a credit that you got when they were 13. However, you can get a credit. So let's just say if your kid is in school, you definitely want to claim them. So yes, you can claim them. And if you're taking care of anybody and they don't have income over $4,300, guess what? You can claim them. As long as they live in your home and you provided support for them.
So again, y'all, you can claim those children who are at age, but they live with you and they're going to college. And what's the age you can claim them to?
I don't know what happened.
I said, what's the age that you can claim them to?
Oh, you can claim, listen, when it comes to that, you can claim your child. You can claim a person as long as you are providing support for that person. It doesn't matter their age. So let's just say if your mom is living with you and you provide more than half support for her. Let's just say your mom lives with you and she gets a Social Security check, but you know her check is but $700. You know it costs way more than $700 to take care of her. Guess what? You can claim her. You can claim her. So there are ways. So for example, let's just say you got a girlfriend or a boyfriend that doesn't have any income, and they have been living with you, and you've been taking care of them for more than half of the year, or you take care of them more than they can take care of themselves. Guess what? You can claim that boyfriend that stay home all day, that suck up your AC, play video games all day, drop you off to your job and come back home, and just make sure the house stay cool. He could be claimed on your taxes as long as he can't be claimed on anybody else's taxes. If that makes sense.
That makes sense. So you broke that down. Okay, so y'all heard that, right? So she telling y'all who y'all can claim, and as long as they don't make $4,300 in a year, y'all can claim them. So again, these are just questions, and y'all make sure y'all share this, because this is a wealth of knowledge, so that somebody else can understand when they get ready to file their taxes. Again, if you're just coming on and you got any questions, go ahead and type the question in so I can let her know. But another question is, I know you said that you can claim the child claim anybody if they living with you, period. Okay, so
you're providing the support. If you're taking care of them more than they're taking care of themselves and they're in your household, you can definitely claim.
Okay, so what's the tax break when it comes to what you can get back without having to owe the state? How much per year? Where's that tax break at that you can make, especially if you're on salary?
So you're asking me what, like in your case, well, you're asking me what can you make to be that that being deducted from your salary so that you won't owe? Is that what you're asking me?
Yeah, like what's the tax bracket? Like if I make $45,000 a year, I know they're gonna pull taxes out of that and I can get money back. But What's the tax if I make 60,000 or 75,000? Do
So
I
you
go into
probably you want to be anywhere between 7 and 10% taken out, anywhere from 70 to 10%. And that again, that is done on that W-4 form. I don't understand why your employer wasn't doing it. They wasn't doing it correctly. I can say that much. I can say that much. Yeah. So anywhere from 7 to 10%.
and that's no matter what pay racket you in.
Pretty much.
So if I was the type of person that made, let's say, 65,000 a year, am I over the range where? And I'm asking this question because again, it was explained to me.
Okay, so you're asking me about. I think what you're asking me is about the earned income credit. You asking me the earned income credit for how you can make and still get the earned income credit. Is that what you're asking me?
That's part of it.
Okay. So I don't know those numbers offhand. However, I do know with no children, 15,000. You can get the maximum. It should be your AIG, your maximum filing status, single. For one child, 41. For 2 kids, 47. For 3 kids, 50. If that makes any sense. So if you come to me and you're working and you make about 30,000 and you have 2 dependents, you're safe. You qualify for an earned income credit. You qualify for earned income credit. 1 kid, if it's a qualifying child, can depending on how much you make, you can get up to $3,500. 2 kids can get you up to $5,900. 3 kids will get you up to $6,600. So when you see those signs around and you see get $6,000 back, you get this amount. You can get 1 kid 5,000. You know, when you see those signs, I can't see them in my head, but when you see those signs, that is what they're implying. Now, will you get the entire 3,000, 5,000, 6,000? Maybe not. It just depends where you fall at on that maximum amount of your AIG. So when I say your max amount of AIG, that maximum amount of AIG, that is the money after the standard deduction. Is your money minus the standard deduction. So let's just say you make 31,000 and you're single. I think the standard deduction for a single person is 12,000 and some change. It's $12,400 for a single person. For head of household is 18,000, and I believe for married together, I believe it's about the same. So when I say standard deduction, that's the month. So before Trump, we were able to do our taxes and we were able to itemize things. We were able to use what they call a Schedule A, like Apple. In that schedule, you were able to write off your stuff like your uniform, dry cleaning. You've been able to itemize things from your job. However, once Trump got into office and everything changed, he took away, I believe that first year, we had 1 paper. You had 1 sheet for your 1040. They changed it. But then they had to change it back. They had to change some things back. But it was over 2,000 different changes that was made to taxes. The tax rule changed. So let's just say if you were doing taxes in 2016, it changed so much till you had to be retrained. you couldn't just come in and just do as business as usual because they changed a lot of things. So with that being said, the Schedule A went away. When the Schedule A went away, they raised the standard deduction. So when they raised the standard deduction, it's just saying like, okay, you were able to itemize, and once you was able to itemize, you took that number. If it was more than the standard deduction, you subtract it, you keep it moving, you got your AIG. Well, they raised the standard deduction, and we were happy about it because I believe we were happy about it. Oh, they raised the standard deduction. However, you can't itemize anymore. So those persons that didn't have, that don't have dependents, they had no way. They don't have a way of, really getting anything as far as their deduction because they raised it so high. So what that means is every deduction you have to be over $12,400. So that's kind of hard to do. So once you get it, once you get your standard deduction, you take your standard deduction and you minus the amount of money that you actually make, and that's how you get your adjusted income. And then that's how that works. I hope I answered your question.
Yeah, you answered my question. You're probably answering a whole lot of people's questions because I like to just bring all the questions out to the table that I feel like people want answered. Hey, Brother Mo. So when it comes to self-employed income, how does that work?
I mean, what I found, I
Uh-oh. You still there? Hey, Elder.
You hear me?
Okay, I can hear you now. There you go.
Oh.
So go ahead. You said you found.
Yeah, I found that a lot of times we are in business and we do business, but we don't do business properly. We don't have our stuff together properly. So what happens is we don't keep track of stuff, we don't keep track of stuff. We don't keep our records right, and then we file our taxes. So for self-employed people, you got to find a way to understand your money and see your money. And I say that to anyone. If you're making money, make sure you have your stuff in order. So that at the end of the year, you're not scrounging around trying to find your receipt. Even if it's just simple, let's just keep it purchasing everything on one card. If you got one bank account and one card, guess what? You got records of everything. You got money, the money coming in, money going out. You can do that. So for my self-employed people, it's very important that one, you are in business to do business, meaning you have your stuff in order. I say that to say when we came around for the PPP and the EDIL loans and all of that stuff through SBA, a lot of people wanted to get that money, but they couldn't get that money because even though they were in business, they weren't in business the right way. And I say, well, you ask, well, what do you mean being in business the right way? I mean, go ahead, get your LLC, get incorporated, whatever you plan on doing, go ahead, register with the state, get your EIN number, open up your bank account, utilize utilize the tools that you have. If you don't understand it, talk to someone that do understand it so we could help you so that you can be in business the right way. And believe it or not, if you're in business the right way in the beginning and something comes down the line, you can apply for it and you can get it because you're in business. You're already there. And on top of that, what I also see a lot of people doing, they go to tax preparers, and I saw this today. Had someone come in, they wanted to do the a loan, the PPP loan or the SBA, and I do those applications. But when I looked at their Schedule C, they zeroed out. They made no money on the business. So the question is, how can I give you money if you haven't made any money? So, so it's not in your, or even when you get, I saw one sitting on a board I sit on, and we approve loans, and I'm sitting on that board, and we noticed one of the guys that one of the companies want to get a loan. Guess what? He zeroed out for like, a few years, and you want to get a loan, but we can't give you that money if you haven't made any money. It makes no sense. So it makes sense during tax time because you don't want to pay those taxes, but do it really make sense, at the end of the day. So I say to all my self-employed people to really think about, are you in business for this, just for a side gig? I get it. But if you're in business to feed your family, because I have 10 kids and 2 grandkids. So with that being said, I'm in business to do business and to make money. And I advise anyone to make sure that, you have your books in order and it all makes sense. 2+1 Financial Enterprise, we assist owners, business owners, and we assist people with startup and, have conversations and give consulting to individuals that need assistance with that, because everybody don't know. And everybody don't like to read. And we like to know, sign here and do this and do that, and that's just our nature.
Mm-hmm. Okay, so you broke that down. I appreciate that, because it's when it comes to self-employment, what's the bracket per year before you come out of the zone of having to pay back taxes? Or is it with self-employed, you just pay taxes anyways?
I mean, if you make a dollar, you got to pay, to be honest, but I believe it's like 600. You make more than $600, you got to report that 604, and you have to report that. And when you report that, you have to pay a tax on it.
So
And it's and,
is that
and,
per
and
year?
I recommend, what I recommend, make, go ahead go ahead and pay quarterly. Go ahead and pay into your taxes quarterly, so that way at the end of the year you won't owe a tax. Because you got to remember, when you're working a W-2, they're taking their taxes out every 2 weeks or every week or every month or whatever. They are going to be responsible for paying their tax. They are. Now, when you're moving self-employed, guess what? You're responsible for paying the tax. There is no way around not paying the tax. Now, when I say it's nowhere around you on a tax. I won't say paying a tax. It's nowhere around you on a tax unless you zero everything out. And sometimes it happens like that. And or when I say zero out, you have expenses. You have expenses, and sometimes it's basically we are robbing people to pay Paul. For instance, you might have a W-2, and on your W-2 you're making $50,000 or $60,000 a year, and on your small business or your side hustle, you spending money to make money. So then it makes sense to balance it out. But I also said, I also mentioned, you still owe that tax. What I'll say that I won't. How can I say? When you owe that tax, your deductions and your credit is what offset what you owe. So that money you make, once you get to that AGI, the adjusted gross income, once you get to your AGI, you have to pay tax on that AGI. But however, you get credits and you get deductions. So right now we got the credit, we got the earned income credit. You get a little bit more when you got kids. What I saw too, they're giving a little bit more money on your dependent care. So if you have kids and they're in child care, they're actually giving more money this year for that. What I also noticed, if you worked last year and you made more money last year, which required you to get more of that earned income money because of COVID, you can use your 2019 tax as well. So they do have some perks in place, and they also have, if you had a small business and you missed work because you had to stay home and take care of your kids, or you had COVID, or you had to take care of someone with COVID, you put down what you generally would make a month that you missed and how many days you missed, or how many days you missed and what you missed with money. You put that down, and then they have a mechanism where they can give you a little bit money, a little bit on that as well, if that makes sense.
Yeah, it makes sense. Now, how important are receipts? Like, a lot of times we file taxes, but a lot of times we don't keep receipts. And I've seen where if you got the receipts, it can, it can count towards. So it count towards the expenses or what
Yeah.
you're generating income. So
So
how
believe it
important are
or not,
receipts?
believe it or not, Marie, Miss Peaches, believe it or not, it's how you keep your records. So some people might keep all their receipts, and that's good, but keeping your records in order. So that could be, like I said, if you can't keep receipts and it's hard for you to remember to keep receipts, just remember how you're making those payments. Make it simple for you. If you're making payments through that one card because you got that one bank account, just make sure when you're making purchases for your business, if you're not in the habit of keeping receipts, you don't have to have a receipt. You don't have to have a receipt just long as you have a record. So that record could look like your bank account statements. So it could be, there's ways around that. But yeah, receipts are important. They're not that, as long as you're keeping a record, you're good.
Okay, so I got on these nails, so every time I try to unmute, I got to pick my phone, just beep beep. So for um for those loans, when it came to small business loans, I noticed I tried for the loan. Maybe you can explain it to me. I tried for the loan because I got a nonprofit, and I was told that, and I made my nonprofit. This happens to me in 2019. Made from all the grants that I was getting, made good money for all the events and stuff that I was doing. They told me that I disqualified for it because I was a nonprofit for the
No, they were giving money to.
so nonprofits are considered small businesses, correct?
Yeah, I mean, they were giving, and I can look it up, but I'm pretty sure, yeah, because I know some nonprofits that got it. So the method, I do know they were looking at your credit. I do know they were looking at the amount of money that you made. Now, here's the thing. You remember when we talked about zero and out? So if your schedule C looked like zero, then unfortunately, they're saying it goes back to you didn't make any money for me to give you any money. So it's different things that they look at. So, they looked at your schedule C, pretty much your schedule C and your credit. Even though it was a grant and even though it was from the government, they also was looking at your credit. And I believe they were looking at your Experian credit. And your Experian credit had to be at least a 580 the first go round. I don't know what it is now, but it had to be, I believe, at least a 580 to get approved. So they were looking at, how long you was in business. So you had to be in business before COVID hit. You had to have a 2019 tax return, and that money had to look like you had money, make a little bit of money, and you had to have the credit. So that's my understanding of the SBA.
Okay, because
And
they didn't explain all that. They just said these were loans that you can get up to $1,000, and if you got uh, um, employees, you can get up to $1,000, $10,000 for each. $1,000 for 10.
yeah, they were looking at your credit. Because I've, I don't know. They looked at your credit and they looked at the amount of money you made, prior to or what you said you made. So, yeah, yeah. And they were really strict for the people that really, really need it. They were really strict. But some people was able to get it and some people weren't.
Okay, Okay. So and that's the SBA loan, correct?
Yes, that's the SBA. Yeah. Believe
Because
it or not, the PPP and they're different. The PPP is a loan. Well, they both had loans and grants. So the PPP, they had the loan and they had the grant. But I believe the PPP, if you do certain things in your business, you could be forgiven. So if you use that money for salary, if you use that money for bill, your bills and rent and all of that stuff, when they do the review, you don't have to pay that money back. It'll be considered a grant. For the EDIL, that loan and grant, if they gave you the grant, and I believe they was giving a grant up to 10,000. If you got the grant, you don't have to pay it back. But anything over 10,000 end up being a loan, and they had a small percentage that you have to pay back in 12 months from you receive the money, from when you receive the money.
so that means and they're still doing these loans right now, right? Because I can go and I can go back and try this again, right?
Yeah, you try it, man. I'll keep trying. As a matter of fact, I spoke to someone from SBA around the time, early last year, and then I got one of us, and he was like, we don't apply. And they have money, SBA's US Small Business Administration have money for us, and it does not matter. It doesn't matter if it's during the disaster or not. They have money for small business, so it's up to us to go. We don't know that, but it is there. And to believe it or not, the Urban League of Broward County, they are, they're right there. I'm very attached to them, but they're right here in the BMSD unincorporated Broward County. And if you have a business over there, they have money coming up, getting ready for this year. Right now, they are a CDFI and they can loan money, and they're loaning.
Okay, so I was just thinking after thinking about all that stuff. So with the SBA loan,
It's a big echo. It's like a scratchy noise. It's a scratchy noise.
because I unmuted. I have to mute whenever you talk.
Want me to mute?
You hear me better now, right? I mute so that they can hear you.
Okay.
For the SBA loan and the PPP loan, those not just disaster loans. Those are loans that small businesses can get from capital, right?
Yeah, small business. Yeah, with under 300 employees, I believe. 300 to 500 employees. Fewer.
Okay, so is there anything else that you think that we need to know when it comes to? Because I think I don't feel you over a whole lot of questions. But one more question on that small business loan. So right now, the SBA loan and the PPP loans are still going out. What are the what do you need as a business in order to apply for this? I know you got to be a small business, but what are some of the things that we need to be able to apply? Because I know we perish because of lack of knowledge, and then sometimes when you do get the knowledge and you do get the education, you still don't know. I want to help somebody tonight. If we can still apply, if you're a small business, what type of small, that's the question, what type of small business is it? Could it be that you're an author? Could it be that you're, what type of small business is it?
Oh, it doesn't matter. As long as so you're asking me what type of business do they give to? It don't matter. As long as you're in business, remember when I say we start working, we start hustling, but we're not in business. As long as you're in business the proper way, meaning you've come to 2+1 Financial Enterprise and Associates, and we help you with your business startup. We helped you get your LLC. We help you get your EIN, or we help you get incorporated. We help you with your DBA. We help you with, we tell you how to go and get your business account. We help you with your credit. If it's not in order, we help you, show you how to develop your business credit. So we do that. That's what we do over at 2+1 Financial Enterprise. So if you're in business, why not be in business the right way? Go ahead and invest some of that money. If you cooking pies, Marie Cook Pie Incorporated or LLC. Um, and I say that to say we give advice on how you should be in business. So you may be a LLC, however, you may not know the difference. You know, you still a sole proprietor. So go ahead and get your LLC because you know that business will grow and it will thrive. But that's stuff that we talk about later. I don't know what happened. Stuff that we talk about later.
Okay, got it.
What happened?
Huh? You can hear me, right?
Yeah, you went away. I didn't see you at first.
I put you on solo.
Oh, okay. Yeah. So I was like, oh, what happened? I don't hear about myself.
Yeah.
So what we don't do, we don't be in business the right way. So go ahead and get that side hustle and register it. Get it together. You know, register your business and do your business the right way.
So right now, okay, so what she's saying, y'all, is that right now y'all can still go ahead and apply for these businesses if you got a small business, whether you're author, hairstylist, whether your business is mowing lawns, you know, whatever your business is, if you're in business the right way, then I think you should go see a tax preparer and somebody who assists with businesses, such as Kareisha, because as y'all can see, she's a wealth of knowledge in this area, and there's a lot of questions still have not been asked, but I have no doubt that she can answer those questions. So is there any more information you want to get to them about this tax season and what they should be careful of when it comes to other, you know, tax fraud and all that type of stuff?
Well, I mean, I'm gonna tell you to come to me. I'm gonna say, come to me, 2+1 Financial Enterprise. I'm gonna say, come to me because I want your business. I'm gonna tell you that, but I do educate, and I want you to. Some people don't want to know, but sometimes it's good to be educated in what you do. And especially when it comes to finances. So at the end of the day, I say steer away from those people that make you make a lot so they can take a lot. Steer away from those people because believe it or not, IRS don't want people like us in business. They want you to go to TurboTax and they want you to go to TaxAct because when you go on those websites, you're not getting the bang for your buck. But when you walk into some of these tax preparers, you know, you're giving a lot. It's like you walk away and you leave your soul behind. And that's not what 2+1 is all about. We have about 7 associates, and each 7 associates right now, they are working. And guess what? We're helping our family and we're helping our friends because you need to know what's going on. 2, you need to be aware of individual fly-by-night tax offices. And you need to be wary of individuals that's taking advantage of the situation. Meaning you make $6,000 and then they charging you $700, $800 just to file your taxes. Now, don't get me wrong. Sometimes it costs just that much. But if you know you have a simple W-2 and a kid, you know, don't allow them to put up all type of stuff on your return on your information so that they can get money. So I just say steer clear of scammers, steer clear of opportunities, and just steer clear. You know, go to a reputable company that's been in business and that will do you right and treat you right and also educate you and open year round. And that's me. That's my company.
All right, y'all. So this has been a pop-up question and answer with taxes. I hope y'all got something out of this. If y'all just joining us, just go back for the replay because it was some pretty interesting questions. As always, I so appreciate all my friends back home in Fort Lauderdale that don't leave me hanging. I always got my back. And It's good to have some friends in places where you know you're gonna be taken care of. And she takes care of me. She takes care, as a matter of fact, she takes care of the family, my kids and all. So we've been in good, we've been in good.
Yeah, Marie, for like, you've been rocking for me like 3 years, 3, 4 years now, right? You've been jumping in the gym.
Yes, I have. And even knew her, but didn't know her. So trust me, I always was in the same vicinity with her, but just didn't really know her. But started to getting to know her, and we've been cool ever since. So trusted friend, tell me no, don't do it like that, do it like this, and it has not. I have not been steered wrong. So if y'all don't have somewhere to go in Fort Lauderdale to do y'all taxes, go to 2+1 Financial Enterprises and Associates. Where are you located?
I'm located at 1 East Broward Boulevard, Suite 700, Fort Lauderdale, Florida, 33301. I am I'm in the building across from the City Hall on Broward. I can be reached at 1-877-2+17. So that's 1-877-2-PLUS 1 and the number 7.
So why I only got 1 East Broward Boulevard Suite? Let me put that back up there.
1 East Broward Boulevard, Suite 700.
Suite 700. I'm putting this up here for y'all so that Broward Boulevard Suite 700.
33301. I'm in the building across from the City Hall, the glass building across from City Hall.
Glass building?
Yep, the Kemet building. You can see me off 95.
The street from City Hall. All right. So here y'all go. If y'all can put this information down if y'all in the Fort Lauderdale area. Oh, and you know what the greatest thing is? She does out-of-state taxes as well. So
yep.
I know some of y'all like, you in Colorado. Well, yep, she's been doing my taxes for the last 2 years. She did, wait a minute. You did them for the first time last year, and she's doing them again this year. So yes, she does out-of-state taxes.
Remember, Marie, when you came out and I was on university? That's why I say you've been shooting with me in the gym. You remember that?
Yeah. Duh. Sometimes you got to remind me of places. But y'all got the information. 2+1 Financial Enterprises and Associates, 877 2+1. That's 2+PLUS. 1 ain't got time to figure out what those numbers is, and then 7. 1 East Broward Boulevard, Suite 700, glass building across from City Hall. Y'all go check her out. They legitimate, they legit, and they real, and they keep it transparent too. So y'all gonna get what y'all need. I appreciate y'all for tuning in into this pop-up, and I'll see y'all Friday for Friday Straight Transparency at 9 p.m. Eastern with my girl Jandra Alexander. We're talking to the Queen Sister. All right, y'all. Peace.
Peace.